Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York on Monday, February 22nd, and we're looking at a nice rally in U.S. equities markets today, spurred on one by a strong dollar as well as strong crude oil. Dow Jones Industrial Average currently trading up over 200 points on the day, 218 and change at 16,609. The low has been 16,417 and the high 16,064. That corresponds to a higher Standard & Poor's, currently trading about 1939.75 to 1940 in that area, puts it up about 25 points. We did send out a special trade alert recommending the initiation of long position in the E-mini Standard & Poor's 500. And on today's show, I do want to spend a couple of moments going over the rationale behind the trade recommendation that we made this morning. And if we are correct and are looking at a market that will have a sustained rally, what kind of exit strategy we're looking for in terms of price point that we would look to cover this trade. We'll do that all on today's daily report. So traders, first chart that I do want to look at on today's show is a daily chart, E-mini S&P 500. We do have a 200-day and a 50-day. The 50-day is what I believe is important to look at right now because obviously we're flirting with the possibility of breaking through that particular price point. But here's the way that I look at it. We have some critical areas in the market. These are fib retracements that are based upon the range of the August meltdown. In other words, the highs up at around 2109 down to these lows at about 1831. Now, obviously, we actually took out these lows on this particular meltdown here and actually saw the market on an intraday basis, this being a daily chart, actually move well below these particular areas. But as you can see, beginning last week, we had some really strong moves in the market, and we had three very, very strong days taking us up from these lows at about 1831 to close well over 1900. Now, what prompted the initiation of a buy signal today was the fact that we were breaking through this particular price point. Right now, we're trading, as I said, about 1938. 1939, that is our entry point. And the key right now is that we want to absolutely see a sustained close above this particular price point, and the higher the better. So we definitely want to see a close above 1937. Now, a lot of the move today is in sympathy with crude oil. Crude oil definitely moving up about 6%. In any other market, that would be a tremendous move. In crude oil, it's about part and parcel for what we've seen. We'll go ahead and we'll blow up this weekly chart, and we can see without a shadow of a doubt the fact that although last week we did get some extreme highs in the market and the market closed higher than the open, it was almost very much a doji-like week. In other words, it closed very, very close to the open. Now, only the first day of trading, of course, today, but we can also already see a pretty nice sustained move in the market. Resistance right now on a technical basis has got to be at about $34 a barrel. We are quickly approaching that as we're about 31.5. And in terms of key support, I look at these bottoms right in here in terms of the lows, and they're sitting at around 29, just below 29, call it 28.80. That is where I would put support, and this is where I would currently put resistance. Another market that is certainly moving and moving strongly today is the dollar, up about 0.75% at 97.35. And of course, the key with the dollar in terms of our levels of support and resistance are as follows. We know that we've got some real resistance in the market that will come in at about 98. That's this particular area right here. Let me go ahead and get my pointer up, but you can see these series of tops right in here, and those are coming in at around 98. And so that to me is our critical area right now of resistance. Support is really coming in at this 23% retracement at about 95 in terms of the dollar index itself. Traders, maintain your current long position in the E-mini Standard & Poor's 500. Maintain your current stops. This has been Gary Wagner, wishing you as always always good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.